Before we get to today's trading, I wanted to talk a little bit about yesterday's FOR Renko on the ES. A trader mentioned to me last night that the FOR Renko ES was a trade that you could have been in all day yesterday and for better than 10 points. So I went back and looked at the FOR Renko ES, and this is a screenshot of it. Now, he also mentioned it was a little disconcerting that the swing cycle kept going up and down, and also the DIX kept moving up and down here, showing the equity was going down. One thing to remember about the DIX, it's very good for short-term trades, but not for a long-term trend. And the same with the swing cycle VB. On a trend, it will continue to cycle up and down. Now, one thing I thought was interesting, just to see how it would look, is that as you know, the default setting for the swing cycle VB is 14, which is the dominant cycle of the ES. And so a cycle is measured from top to top or bottom to bottom. Now, you can take a half cycle, which would be 7, which measures the cycle from top to bottom and bottom to top. So I set the swing cycle VB to 7 on this chart just to see what it would look like. And you can see here, every time it crossed the variable band, the equity went down somewhat, and when it crossed from below, the equity went up. Here it went down, up, and up here. Now, one thing you can do, which I don't do, is on a trade like this, you could add to your position on these times when it crosses above the variable band in here. I personally don't think that's a particularly good idea, but some traders like to do that, and this would have been a good time to do that. But what I wanted to mention is, when you're in a trade that goes on and on, I think the best indicator to use during that trade is the DMI differential, because you can see it stayed, except for 2 red dots here, it stayed, and it still stayed above its zero line all through the day, right in through here, and market closed over in here, and so you would have got out of this trade somewhere up in here for a really nice profit. And the thing that is good about using the DMI differential to stay in a long trade is it's not quite as sensitive as the RWO. And you can see the RWO came down here and showed no trend right in here, but the trend was still really up in here. And so if you followed the DMI differential, you could have stayed in this trade all day. I didn't even look at the FOR Renko yesterday, so I missed all of this. I had pretty much given up on the FOR Renko, at least for now, because it just hadn't been moving that much lately. Now here's the ES2 Renko on 2/17/2012. This was an early trade I made today. Went long right here after a fairly lengthy squeeze, and the variable band was crossed right in here, and the swing cycle was green, moving up, and everything else was moving up here and here and here and here. So there was no clear warning in advance that this was going to be the end of this trade up here. So when the triangle completed itself, I got out of the trade as soon as I could, and it was for 2 points. Now, I took this screenshot after I got out of that trade right here, and I wanted to show why I really didn't get into this down move here, and that was because the DMI differential, even though the dots turned red here, it stayed above those dots, never went below the dots, which indicated this was not any kind of a strong down move here. And this up move here, the swing cycle was yellow and moving up here, and just never turned green on the up move. So I just wanted to mention why I just ignored these two potential trades. Now, one thing that you could do, which again I don't do, is you could trade the DIX in a situation like this and go short when the DIX turns red here, and then when it starts moving up, get out of the trade, and then you could have gone long here with the DIX and got out when it started moving down. This is very short-term trading, which I don't particularly like to do, but it is a technique that some traders use, and they will settle from just some fast, quick little profits. I don't know what this little vertical white line is here. It just seemed to appear on the screenshot. Now here was my second trade of the day. I went short on this bar here, and I think it's fairly clear everything was moving down at this point, and the Bollinger Band differential oscillator was below its zero line here. Now it got really choppy right in here, and you can see how the chop showed up on the binary triangle right here. Now I should have got out of the trade sooner right in here when this choppiness started, and you can see the divergence here between the DMI differential. It was moving up here even though the equity was flat in through here, and the RWO was also moving up here. So I should have got out somewhere around in this area here. I didn't, and I managed to squeeze out a 1 point profit for this trade. And I don't expect an awful lot of movement today, because usually the day before a holiday or a long weekend is not a particularly good day to trade. And so the next video will be on Tuesday, and usually the day after a long weekend isn't a good day to trade, so we'll see how things look on Tuesday.